Hello. You're watching my video series Helping You Move Forward in Reverse. My name is Mace Kochenderfer. I am a certified reverse mortgage professional with Colorado Reverse Mortgage. I answer people's questions. I discuss the variances of reverse mortgages and other topics as well. Today's question comes from Kimberly M. She writes, Mace, my mom and dad got a reverse mortgage 16 years ago. Mom passed away last year, but dad is only 78 and going strong. I don't mean to sound like I'm giving my father a death sentence, as we're together now as I type this, but my question really isn't for today, but let's say for 10 years from today. In my example, I'll assume Dad's home will be worth $600,000. His current balance is under $400,000, but since he's on a fixed rate, I can project that his loan balance will grow to more than $725,000 in the next 10 years. As sole heir and executor of his estate, what are my obligations at the time of his death? Will I be required to pay off the loan balance? And how long am I given to deal with all of this? Signed, Kimberly M. Kim, great information that you shared with me. Thank you very much. It sounds like you and your dad are close, and that he trusts you to be involved in his matters not only today, but later after he passes away. That's a big responsibility, and I'm sure you're up for the task. You certainly seem thorough and are planning ahead. I appreciate your inquisitiveness and want to give you an attaboy for at least getting a few things figured out well in advance. Now, I wasn't the person to help your mom and dad 16 years ago, so I'm unable to review the original file, see how it was structured. But each month, your dad gets a monthly statement from the current loan servicer. Probably receives it around the first week, at the end of about the 7th to 10th of every month, I'm guessing. But on this statement, you're going to find valuable information, important information like the account number, the current balance, interest rates, and a contact phone number. Now, assuming that he's already not done this, if your dad is willing, I suspect he is, but he can contact this loan servicer and add your name as a safe person who's able to access the current loan information over the phone with them. This is going to give you access to information, but it's not going to give you the ability to modify or access or do anything to the reverse mortgage itself other than just get information at this point. Now, many of you already have a tendency to get off subject at times, not because I lack focus or I have ADHD, but because different topics blend with each other, and one sometimes moves into another. But I feel this is an appropriate time to touch on the subject of the importance of getting a power of attorney, or a POA, power of attorney, in place. POAs are definitely a subject worthy of its own video, but I'm only going to touch on the most basic aspects of it today. A POA can be written in many ways, but typically they're written as a medical power of attorney, a financial power of attorney, or a combined medical and financial power of attorney. I've seen one child be given the medical aspect of it, and the other kid be given the financial side. So if they both have different jobs than other times, and this may be the case for you since you're the sole heir, you'd be given both responsibilities. But a power of attorney is in effect, rather, only while the grantor, your dad in this case, is alive. At the moment of his death, the power of attorney is going to cease to exist. At that point, it's the executor then that has the legal decision-making rights Now, oftentimes, again, the power of attorney and the executor are the same person, but they are definitely different vehicles, different tools. A POA is used while the person is living, and the executor is in charge after the person's death. Now, Kimberly, a power of attorney can only be put into place by the grantor while they are of sound mind. A person that has been declared incompetent by a medical doctor should not have the ability to create a power of attorney because what we would have, we would see elder abuse would be prevalent. But when a person is incompetent and they do need a third party assigned to represent them in medical and financial matters, then the courts need to be involved, and they're going to assign someone to be guardian or protector for the senior through what's called a conservatorship. This is a time-consuming and, frankly, an expensive process. So getting a proper power of attorney in place is important. It's a lot faster and much cheaper. But to give your dad peace of mind today, and so that he doesn't feel like he's giving you control of his life, the lawyer can easily make a power of attorney effective only when a doctor, or sometimes it's two doctors, depending on how the POA is written, but when a doctor or two have given their formal medical opinions and declared the senior, or anybody for that matter, to be incompetent or physically unable to communicate his or her desires. So, assuming your father lives a long, strong, and healthy life until his death, then a power of attorney, while it was in place, was never activated. I do think power of attorneys are important to put in place. And if you do want some names and numbers of elder law or estate attorneys, I'm happy to pass some on to you the next time we visit. Okay, so again, let me refocus here. You had first asked, as sole heir and executor of his estate, what are your obligations at time of his death? So I'm only going to be able to comment to your question as to your obligations regarding his home and the attached reverse mortgage liens. Once he has passed away, you're going to need to contact the loan servicer. These are the folks that are sending the monthly statement each month. They're going to want a copy of his death certificate, and they're also going to want proof that you're the executor. That's going to show them that you've got the legal right to settle the mortgage because it's reached its maturity at that point. Now, you stated that in a decade that the property would be upside down with a loan balance of over $725,000 and that the home value was estimated to be around $600,000. Again, this is 10 years into the future. You'll figure that out later. But assuming these numbers are accurate, you're going to have a decision to make. If you want to retain the home as your primary residence, as your second home, or for investment purposes, you certainly can. The loan servicer is going to get an appraisal completed, and you'll need to pay back 95% of the home value at that time. Not 95% of the loan balance, because it's upside down. You're going to be responsible to pay back 95% of the appraised value. So using the numbers you gave earlier, the mortgage company will need to be paid back $570,000. Now, they're still owed $725,000, but that's not going to be your problem. The mortgage lender is going to be reimbursed the difference, which is $155,000, and they're going to be made whole through the FHA, the Federal Housing Administration. So your father's estate are not responsible for this portion, because 16 years ago, and every subsequent month after that, the FHA was paid an insurance premium, and it's this insurance that is covering this exact situation. However, if you've got no desire to keep the home as your own, then the home is going to become the lender's obligation. Of course, you'll go in, you're going to take some or all of the contents out, whatever it is that you want. But if you're not interested in your dad's 40-year-old green lazy boy recliner, then you can leave it. The bank is going to send in a crew after you're done with the property. They're going to throw away all that old stuff that nobody wants. They're going to get it cleaned. They're going to get it ready to put on the market. They're going to hire a real estate broker, certainly, and pay the expenses of selling the home. Now, your follow-up question was going to be, will you be required to pay off the loan balance? Well, as I previously, in the previous example, whatever shortfall the bank realizes after the sale, the FHA will satisfy that obligation to them because of the mortgage insurance that was paid over the years. Now, I think your last question was, how long are you given to deal with this situation? The fact that you're getting your ducks in a row today tells me that I shouldn't be too terribly concerned or worried for you. You're ahead of the curve. You've got lots of time to figure out whether you want to keep the property, whether you want to keep the home or not. But most heirs already have homes of their own and really have no interest in retaining mom and dad's old house. So the best answer I can give you is or anybody else for that matter, is that you should deal with it as soon as possible. Of course, we all recognize that there's a period of grieving after death. There's other priorities that need to be dealt with, like funeral arrangements, and there's going to be the time it takes just for the county to provide you with the formal death certificates. But you're going to need to confirm with the servicer this. But if you want to retain the home, I believe that they're going to want to be paid back within 6 months from the date of death. This is more than adequate time, or it should be more than adequate time, for you to figure out your finances and figure out how to make this work. Now, of course, if you plan on turning the title of the home over to the lender because it's upside down again, you should still have the same amount of time, but honestly, the lender's going to want to get the home listed and on the market and sold ASAP, as soon as possible. But I do want to take my answer just a little bit deeper, and let's go out on a limb and pretend, wishful thinking here, let's pretend that the loan balance is still the same, $725,000, because math is math, 2 + 2 always equals 4, and we can accurately calculate what balances will be in the future on fixed rates. But let's say the neighborhood got hot and the home has appreciated and is now worth $1 million. Well, in this situation, of course, you'd be foolish to transfer title to the lender because you got $1 million house and the home or the loan balance is $725,000. There's a ton of equity in the home, $275,000. But what I would do if I were in your position and this was given to me, I'd list and I'd sell the home. I don't want $1 million rental property, and I have a home of my own. I'm quite happy here. So I would list the home, sell the home. Through the loan or through the sale closing at the title company, the reverse mortgage is going to be paid back their $725,000. Now the difference is the equity in the property, and that again belongs to the estate, belongs to you via your father's estate. Now, many loan officers will tell you that you've got a year to sell the home and to pay off the bank. This is not correct. I have told lots of people this over the years. You do not have a year to sell the home and pay off the bank. What you have is you've got 6 months in which, after death, 6 months after death. So if it takes you 2 months just to notify the bank, well, you've already lost 2 months, and you've now got 4 months left on this 6-month clock. But you have 6 months after death to sell the property. Now, at about month 5, you can contact the servicer, the loan servicer, and ask for a 3-month extension. To my knowledge, this is has always been granted. Now, what they have to do, though, is they have to reach out to FHA for the extension, because it's FHA that's actually giving you this extension. Now, because it can take a few weeks for FHA to process this request, do not wait until the end or close to the end of the 6th month. Otherwise, the lender is required, through rules and regulations, to begin the foreclosure process. So you may want to consider lowering your price at around month 5 so that it has a greater chance of selling. Now, again, around month 8, not at the end of month 9, right? But sometime in month 8, I want you to call back in and you can ask for a second extension. Now, this will be the final extension. Now, at this point, you should definitely be reducing the price. If you haven't sold a home in this window, then frankly, you're just asking more than what the home is worth. Supply and demand. Now, once the second extension is granted by FHA, your 6-month and your 2 3-month extensions has given you a full year to have sold the property. But it's very important that folks understand that they don't have a given year to sell the property. It's 6 months plus 3 months plus 3 months. Okay. Now, again, if after 12 months you've not satisfied the mortgage lender, you're going to receive a notice of foreclosure, as this is required by law. This foreclosure does not affect your credit, doesn't affect your father's credit either. Even if he was alive, it wouldn't affect his credit because of what's called the non-recourse clause that's actually written into a reverse mortgage. But I wouldn't expect it to be a whole lot of fun getting this notice of foreclosure in the mail either. So at this point, you may determine that it just makes sense for you to reevaluate the true value of the home. Perhaps it does make sense for you to turn title and the keys over to the bank and put this 12-month emotional roller coaster period behind you. As always, I've got more to share, but reckon that if your eyes haven't glazed over at this point, they soon will. Knowing that Dad has at least another 10 years ahead of him, let's take a break for now, and you can think of more questions to throw at me another day. Until then, thank you for the trust you have placed upon me to answer your questions, and thank you very much for the referrals. Bye for now.